Okay, so you've just done it. You took that huge step. You applied for a mortgage. It's exciting, right? A little nerve-wracking for sure, and you're probably thinking, okay, this is just between me and my lender. But what really happens the second you hit that submit button? Well, it's a completely different story, and we're about to pull back the curtain on exactly what's going on. So let's set the scene. You've found the house. You've spent hours getting all your documents together, and you finally give a lender the green light to go ahead and check your credit. Now you're just waiting. Maybe tapping your fingers a little, waiting for that pre-approval. Totally normal part of the whole home buying journey, right? And then it starts. First a buzz, then a ring, an email dings. Another call comes in. And here's the weird part. It's not the lender you've been talking to. Nope. It's a whole bunch of other lenders, names you've never even heard of, all trying to offer you a mortgage. And you're sitting there thinking, wait, how on earth did they get my number? And how did they know I was looking for a loan right this second? Look, this is no coincidence, and this is super important. Your original lender probably didn't just sell off your info. What you've just walked into is it's a perfectly legal, but let's be honest, a super confusing industry practice. So let's break down what's actually happening here. Okay, the magic phrase for this is a trigger lead. Here's how it works. When you apply for that loan, your lender does what's called a hard pull or a hard inquiry on your credit. The big credit bureaus, Experian, TransUnion, Equifax, they see this inquiry pop up on your report. And that single action triggers an alert in their system. They then package up some of your information and, you guessed it, sell it as a hot, fresh lead to other lenders. So let's walk through it step by step. 1, you apply for the mortgage. 2, that application triggers the hard credit check. 3, the credit agency sees this, packages up your info, and sells it off as a lead. And 4, all these competing lenders start calling you, trying to win your business. And the crazy part? This can all happen insanely fast. We're talking sometimes within a matter of hours. Okay, I know what you're thinking. This sounds like the Wild West of data, right? But it's not a total free-for-all. This whole practice is actually regulated by a federal law, a pretty important one, called the Fair Credit Reporting Act, or the FCRA for short, and it lays out some very specific rules of the game. All right, rule number 1, lenders can't just go on a shopping spree for your data for no good reason. They need what the law calls a permissible purpose. And in this situation, their stated purpose is to make you an offer for a loan. That's considered a legit reason to get access to your info. Now, this next one is really important. Any lender that calls you because of a trigger lead has to be making what's called a firm offer of credit. This can't just be some bait and switch tactic. It has to be a real, legitimate offer that they are fully prepared to stand by, as long as you meet all their usual criteria. And building on that, rule number 3 is that the lender has to actually have the ability to honor that offer. They need to have the cash and the underwriting systems in place to actually follow through. It's a rule designed to stop lenders from making these totally empty promises just to get you to pick up the phone. And finally, and this one's for you, the consumer, every single one of these solicitations has to tell you how you can opt out of getting more of them in the future. So there is a way out. It gives you a clear path to make the calls and emails stop if you've had enough. So, okay, we get it. It's legal, it's regulated, but why should we even care? Why does this matter? Well, because this whole system has some very real, tangible consequences for literally everyone involved, from you, the home buyer, all the way to the lenders. For you, the person actually buying the house, the biggest risk is just sheer confusion. It is so common for people to think these new callers are somehow connected to their original lender, and that can lead you to share really sensitive information with, the wrong people. That confusion is the perfect breeding ground for some pretty deceptive marketing and, in the worst-case scenarios, even outright scams. And you know what? This creates a huge split in the lending industry itself. For the big, giant national lenders, buying trigger leads is just another Tuesday. It's a standard tool for finding people who are ready to buy. But for your smaller, local lender, it's a massive threat to their business. Think about it. They do all the hard work to find you and get you pre-qualified, and the moment they pull your credit, a dozen competitors can just swoop in. For a long time, this has just been the way things are. A bit controversial, but pretty much accepted. But there is a massive change coming, a real plot twist that is about to completely upend this entire system. So today, right now, We're living under those FCRA rules we talked about. But get ready, because starting in March of 2026, a brand new law called the Homebuyers Privacy Protection Act is going to take effect. And this law is designed to dramatically, and I mean dramatically, restrict trigger leads. It pretty much bans the practice entirely unless you, the borrower, explicitly give your consent. This is a total game changer. So, what this all means is that we are heading toward a future where applying for a mortgage won't automatically unleash a flood of phone calls you never asked for. And that brings us to our final and maybe most important question. With these new privacy rules just around the corner, has the power in the home buying process finally shifted back into the hands of the consumer?